Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at the cannabis stock gainers and losers of last week. Origin Agritech, they closed up 8.7% at $12.59. Curaleaf Holdings, they closed up 2.6% at $8.43. And Forefront Ventures, they were up 6.8% at 62 cents. So that's an issue for me right there at 62 cents, but I like Forefront. I've seen that they've had to liquidate a lot of their assets in order to get some cash. They invested some things that they didn't want anymore and are changing their minds post virus. So that's not necessarily a bad thing, but you want to take a look at anything that's 5 digits ending in F. So FFNTF is a symbol. You want to make sure that that's DTC eligible. The Depository Trust and Clearing Corp is essentially what ensures that that company is legit. And so that they can trade online. So you can go to Pink Sheets or the OTC markets and verify the profile, make sure that the transfer agent has been verified. With the active transfer agent, that's going to eliminate high fees. So if it's non-DTC eligible and they aren't able to clear electronically, instead of mailing paper certificates, that's a $75 buy and sell from the brokerage firm if they even allow it to be traded. So this is how you want to verify penny stocks, basically. Forefront is a good company. I'm not sure if they're going to go anywhere. I just know the individuals who were involved, and I know that they had to pivot, and you can see it cost them a lot in terms of market cap. Some of the losers from last week was Corbus Pharmaceuticals, down 6% to $6.27. And Nextech AR, they were down 4.6% to $4.60. Nextleaf Solutions was down 8.5% to 20 cents. Again, being a penny stock, you want to make sure that everything is verified, a verified profile, that they have a transfer agent, essentially making sure that they're DTC eligible, that you can buy them at a brokerage firm without paying too many fees. Some brokerage firms will just automatically eliminate any 5 digits ending in F to make sure that it's not DTC eligible, requiring that the company call up each brokerage firm like E-Trade and say, hey, make my security tradable. So that's kind of how that works. But ticker symbol OILFF. Nextleaf Solutions has a ton of patents. They don't have revenue though, and that's obviously an issue. So in addition to making sure it's DTC eligible, you also obviously want to make sure that there's trading. A couple of things you want to make sure when you're buying a penny stock is that they're trading consecutively and that there's not a gap in trading days. You also want to look at volatility and volume. So make sure that there's enough volume that an order isn't going to be a pump and dump type situation. There's a lot of other things you need to look at, like, insider lockout periods, if they're going to dump a bunch of securities, if there's lawsuits, all of these things. I don't even touch penny stocks. I'm just telling you, there's a couple really, really depressed stocks here. And if you are going to gamble, do it wisely. Cannabis companies went into earnings season. Aphria saw, I think, an 81% increase in revenue year over year, but they have a technical stop. So if you look at the price, it's hitting a 5% resistance level with a lot of people setting stop losses at $4.75. So when it hits that price, they're cashed out. So regardless of the fundamentals, it's not going to go beyond that technical mark. The ETFs, they fared okay, which is funny because ours is doing phenomenal. We're nominated for Best AI Platform and Best Alternative Investment for the Benzinga FinTech Awards this fall. And so these ETFs can't even hold a candle, but we'll report on how terrible they're doing anyways. YOLO was up 5.4%. ETFMG Alternative Harvest, ticker symbol MJ, which we are annihilating. They were up a measly 1.2%. THCX, the cannabis ETF, they were up 2.6%. Amplify Seymour Cannabis ETF, they were up 3.2%. Tune in later this week and we'll show you how we're up over 60% year to date and crushing the competition like MJ. I think we're almost 90% year to date over them and 147% over Podex since August of last year. And so again, they can't really hold a candle to us. Canopy Growth, they launched a new US-focused e-commerce website called shopcanopy.com. So that'll be interesting, directly competing against the World Trade Center's export store that I helped set up for hemp and CBD companies. We're also seeing some specialty purpose acquisition corps. They bought or at least partnered with Clever Leaves in Colombia. So as Canopy left Colombia, they're now taking this SPAC or specialty purpose acquisition corp or blank check company to kind of help them move forward. So not really sure what's happening in Colombia. Huge opportunity loss for Canada. There's got to be something going on down there though. Canadian firm FSD Pharma, they're suspending all cannabis-related activities. They began liquidating its assets, including 25,000 square foot production facility in Ontario. So we mentioned the Specialty Purpose Acquisition Corp and why that's important. Once companies' valuations don't look good anymore, companies start to just kind of look elsewhere. And so this happens every time we reach an economic peak and companies no longer can reinvest their money wisely. Stupid money is what I call it, when companies just go out with really bad valuations and just buy things because they want to put their intellectual property price tag, whatever number they want. They're going to set that with their acquisition price. So these blank check companies are coming out of nowhere. So what does that mean for the cannabis industry? Well, essentially what you can expect so far this year with the 48 specialty purpose acquisition corps that have already raised $17 billion, it represents 40% of all of the dollars raised in 2020 IPO market alone. So what we're going to see now is an ETF or an exchange traded fund built specifically for just blank check. So we're about to see stupid money at this point without a whole lot of valuations because of the lack of opportunities. You're seeing already people buying stocks back. All of the FANGs, the Facebook, Amazon, Microsoft, Google, all of those companies are still buying their stock backs at all-time high because they don't know what else to do with it. So eventually you're going to see a lot of mergers and a lot of stupid money coming out from these specialty purpose acquisition corps or blank check companies. This is a huge amount of speculation. It's going to just basically create a lot of mergers, and these blank check exchange traded funds are going to probably create a lot of FOMO. And so you'll see a huge amount of speculation. A lot of that is going to come in the cannabis space, as well as other sin stocks. So tobacco and alcohol, defensive stocks, gambling stocks, especially next year, 2021, the closer we get to opening and getting closer to normal, whatever that is when that speculation is going to run rampant. And this is the beginning of it. So invest wisely. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.